Here in this video, I'm excited to bring this one to you guys. We're going to look at the full interview from Ron Barron today on CNBC. Only the parts about Tesla, those are the ones that I think you guys would find value out of. But I also want to go over clearly and concisely what I expect for Tesla stock throughout the rest of this year, as well as the beginning of 2024, because it's been a while since it looks so clear what is going to happen. Now, obviously, this cannot account for variable change. That could be a black swan event. That could be another banking crisis. That could be really bad inflation reports from here. But the most likely outcome ahead looks pretty clear to me. Keep in mind, I am not a financial advisor. I am not a financial planner. By and large, I buy and hold Tesla stock for the long term. Sometimes I make trades to the upside. Sometimes I make trades to the downside. Sometimes I hedge my position and I hedge my portfolio. If you guys would like to come trade with us, learn how to do that, link down below in the description of this video. But this should not be taken as a guarantee that these events will play out the way that I think they personally will. With that being said, let's go ahead and listen to this interview from Ron Barron. Most notably, this $25,000 vehicle could be coming within potentially the next year, the next 18 months or so, at the maximum amount of time from now, according to Ron Barron.
There was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data, technology. They make cars cheaper than anyone else. When Ford makes one of these cars, an electric car, every car they make, they lose $36,000 on. $36,000 per car. Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that costs $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now he's making it once a year. He's making $8 billion in a $7 billion plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower. Right now, they will be in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have 3 million of them that are collecting data. 100 million miles a day they're getting for data, and then they're also getting compute that they're going to have more compute than anyone in the world in 18 months to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large that maybe was anticipated or expected?
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies, and they're expensive, number two. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service. The dealers make all their money on servicing. So dealers sell them, they're not selling them.
You talked about trying to bring prices down, and that's something that Elon Musk has talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automakers at meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world. as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt. Tesla employees, there's a good story that one of the executives of, and then I want to talk about other.
Yeah, no, of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he said, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies are not, the union's not in business to keep the employees. They're in unions to have the power.
Before we move off Tesla, just for
by
a
the way,
second.
the stock went down yesterday, not because of that report.
Okay, what do you think it is?
Because of Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like. But he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down.
Okay, we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth there? Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million, they're on their way to 20 million cars. China is about 1 million right now of their 2.8 million. But a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies have done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers, and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he was the only one that's ever been invited into China that's been able to not have a partner, a local partner, to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be an important person at Tesla overall. He's Chinese, and he was brought from China to Texas and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. Both people are getting something from it, and I think that business will continue to grow. But he's going to open plants all around the world for low-cost cars, and wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year and a half from their new model. The new model, they think, is going to do 5 million cars a year. 5 million cars a year for the Model 2. That's coming.
Wow, that was a lot of information in a 7-minute long video. I think Ron Barron has the most logical approach to Tesla, and that's really why I wanted to share that with you, just across the board, whether it's China, the $25,000 vehicle, the UAW situation, like workers' pay, basically everything. I agree with what he just said. And with that logic, I don't think these things are priced into Tesla stock in the slightest bit heading into the new year. And that is pretty dang exciting. But really around that $25,000 vehicle, the question will be, does that cannibalize the Model 3? Or is that going to be a select regional vehicle? Is that going to be the India vehicle? Is that why Elon is, what looks like, pushing hard to enter the Indian market? is that potentially where the Model 2 could be maybe built? I'm sure there has to be some kind of agreement for a factory for Elon to Tesla to enter into India, but $25,000 vehicle would be perfect for there. The East Asian region, the South America, better parts of Africa, Mexico. I mean, all of these areas, basically besides the US and Europe and some consumers in China, the rest of the world, it makes sense to have a $25,000 vehicle. And some parts of China too. You know, China's still a developing nation. Some people in China do well, some people do not. So I think I don't think it will necessarily cannibalize the Model 3 or the Model Y. And I think when it comes down to it, it's all about FSD, about licensing FSD, about what the future of that could be, robots, energy storage, all of that. So I think this is a catalyst in which the markets are not even looking at as a possibility for the next year, 2 years. I don't care if it's 3 years down the line. The stock is not pricing that in as of right now, and that could mean some pretty sweet gains heading into 2024. We'll break down my analysis on what I expect from now throughout 2024 after we share with you guys some interesting news that broke today. The car dealership guy posted this. He says, wow, this is unprecedented. Tesla has quietly started listing new vehicles on cars.com. Tesla has never sold new cars outside of its main website. He says, I'm an investor in cars.com. And look at that. I mean, 9 miles on the speedometer. 2023 Tesla Model Y long range dual motor all-wheel drive. This, who knows? I mean, it could be good because right now you have to like literally go to Tesla's website. If you're just an individual that's shopping for a vehicle, you're not necessarily shopping for anything in particular. If you start to see some Teslas popping up and you actually see the pricing is very affordable, you're like, hey, I could do a Model 3 rear-wheel drive for $40,000, $687 a month. Boom, there you get more sales. I think this could actually be a silent sleeper for Tesla's delivery numbers and ultimately demand. I mean, you literally have to go to Tesla's website to buy a Tesla. Unlike, other cars, you just search up trucks or whatever, and you're going to come to a cars.com or somewhere else listing all kinds of new vehicles. If Tesla were to branch out that way as well, I'm sure cars.com takes a cut, but it could be pretty good. And this says electric vehicle registrations grew at a robust pace through the third quarter of this year, with EV share rising to 7.4% of the US market, according to Experian. Again, demand problems where? Maybe at other EV makers, but Tesla is really not experiencing that. Now take a look at this AI investor sentiment survey that just came out. We actually reported this a little bit in the last video, but I want to highlight this before we get into the next segment of this video, where I think Tesla stock is really going from here. So the week ending November 8th, you've seen the bulls totally take control. From November 1st, you were at 24.3% of investors that were bullish. Now you're at 42.6% of investors that are bullish. You have not flipped this heavily in a long time. I can't remember the last time. And I've tracked this survey for myself for a while. I've just recently started to actually report this to you guys. I've never seen a flip like this. It's literally been years. And this survey has went, I believe, over 70 years now. The survey's been going on, so it's not exactly a new thing. Now, neutral investors actually rose from 25.4% to 30.2%, and bearish investors definitely seen the biggest decline of 50.3% on November 1st. That's a very high level of bears, to 27.2%. Now you have way more bulls out there than bears for our markets. Now, I think if you are a Tesla stock investor, or really anyone in our markets, you have to be looking at it like this. This is at least the way that I'm looking at it that makes the most sense to me. Wall Street very much likes to position for things before they actually happen. So by the time rates actually do get cut and come down, right now we're pricing in the first rate cut in March, which is what, 5 months from now or so, like 4.5 months, technically around there. Wall Street, I mean, by the time you hit January, is probably going to be pricing in the rate cuts and who's going to benefit from that. That's the thing. It's no surprise, using hindsight and 2020 vision here, that big tech did well. We didn't know how high rates were going to go, that they went much higher than expectations. And that's why small and mid-cap stocks did so poorly and big tech did well. Big tech actually benefited from rates going higher because they were making more from their cash that they have on their balance sheet. Well, guess who will benefit from rate cuts in 2024? Small, mid-cap companies, companies that do have a debt or a need to refinance, and a Tesla. Tesla is in a specific position to benefit because not only is Tesla, rapidly innovating and always investing on that front, it's going to make capital a little bit cheaper for Tesla if they do have to, go to the marketplace, raise some bonds, things of that nature. It'll help on that front. It'll help on valuation and also Tesla's core auto business. I'm sure Powerwalls as well, as those are financed products, but about 90% of new cars sold are financed. So making the payment cheaper can be really important. Now, I don't think Tesla is just going to make the payment cheaper and help out the individual person that much. Sure, maybe a little bit, but as rates come down, Tesla will raise prices. That is something we are not expecting. 12 months ago, the estimates for 2024 were over $7 of earnings per share. If you just type into the calculator, a simple calculation, you do $7, I believe it was like $7.10. If you times that by the PE, we're looking at forward P for next year around 55, that would put Tesla stock at $390 per share. If you got back to your 12-month estimates. Now, if rates did come down, maybe faster than what we're expecting, or maybe just along the lines of expectations. Rates are expected to go down in between 0.75% and 1% for next year. If Tesla could raise prices, maybe make a couple $1,000s more per vehicle, and also give customers a lower monthly payment, it's a win-win for everyone involved. And I think we've gotten so many price cuts now, investors are not even considering the fact that Tesla could raise prices. This is one of the core reasons I am bullish on Tesla stock. Really, those like 4 reasons that I just mentioned, but Tesla raising prices is a big reason why I'm bullish. Now, the current estimate is for about $3.94 of EPS. Times that by about 55, you're sitting at $2.16, and Tesla stock's at $2.14. So that makes a lot of sense. Well, what if you come in at $4.75 and you give it the same multiple we see at 55? Then you're at $2.61. Let's say you come in at $5, which is probably a little bit more appropriate, times 55, then you're at $2.75. But let's say you do get multiple expansion, or maybe the multiple just goes. If Tesla comes in with $5 of EPS, that is going to change the valuation calculation, right? So maybe we think Tesla's trading at a 55 times PE, but it could be trading cheaper if the EPS comes in higher than expectations. But let's just go with $5 of EPS. Let's say the Fed does cut rates 1%, so you do get some kind of multiple expansion, considering a 55 times forward PE for Tesla is, historically very, very low. Let's say the PE hits 70 again, which I think is pretty reasonable if Tesla's growing around 30%, or as Elon says, 50% at a compound annual growth rate. The EPS could be, or the multiple could be 100, right? But at $5 of EPS at a 70 times multiple, you're at 350. If you were to hit 100 times multiple, you could be at 500. So, either way you put it, I think Tesla's going to beat the estimates, and I think multiples are going higher. Simply put, rate cuts will mean multiples will go higher. Especially for Tesla, you're probably going to see a lot of capital inflow into Tesla stock, because of Tesla just being the main beneficiary of the Fed reducing rates. Across the board, it helps Tesla. There's not an area in which it doesn't help Tesla besides the $200 or so million Tesla makes on their $26 billion of cash in the bank every 3 months. That is pennies. That is a drop in the bucket compared to what benefits Tesla would see if the Fed did lower rates. Now, on the other hand, we're not even discussing a deal to license full self-driving, which Gary Black expects there could be one of those in 2024, or the Cybertruck. Maybe that launch goes smoother, better than expected. That could also be huge for Tesla stock. So that's kind of what I'm looking at here for 2024. Now, from now until 2024, I think there's a decent chance that you can still rally from here, maybe to about 245, 250 or so. It just depends how the economic data comes in, how the inflation report comes in. We're going to get one of those next week. If you do get encouraging signs that maybe the Fed should cut rates, maybe inflation is falling, the economy is getting a little bit worse, but maybe not quite recession yet, then it would make sense how Tesla could maybe hit 240, 250, on the high end 260 here from now until the end of the year. But I do think as we get closer to those rate cuts, you will get more capital flowing into Tesla stock. So from now until the end of the year, I'm expecting a moderate rally. I'm not expecting anything too crazy. I'm not expecting a crash for the markets. We just got through earnings season. We're not going to get new earnings until 2024. We've gotten most of our data out the way. We know the Fed's stance. Rates have started coming down on treasuries. I don't think they're going to go higher. They're definitely, in my opinion, not going to break out above the highs of, where they previously were, 5% in the 10-year. I don't think that we're going higher than that. So I think markets are kind of conditioned for where we are currently. Again, I don't expect the craziest rally from now until the end of the year, but I'm not really expecting a crash at the same time. Now, when you actually get to that point where the Fed is about to cut rates, when the data looks like we're heading into a recession, I'm sure that will happen. That's when you could see the actual crash or panic start to set in. That could be in the beginning of 2024. That could be in the middle of 2024. In some kind of extreme case where the economy just holds up super, super well, that could be towards the end of 2024. My base case would be for the beginning of 2024. I'm sure the holiday shopping season isn't going to be as strong as a lot of people expect, and you will get fears of a recession. I'm sure that's at least what I'm counting on, and Tesla stock will likely fall. It could fall to 150. It could fall to 170, 180. Who knows? If you start from 260 or 240, maybe, and then you get the fears, then you could fall to like 200 again, right? Or 180. Just depends where Tesla is when those fears do happen. But I do expect Tesla will go lower than where we currently are now at some point from now until the second half of 2024. But it's really the middle part of 2024. It's the second half of 2024 and 2025 you want to be positioning for right now. That's why I'm buying as many shares of Tesla as I possibly can in moderation. I want to keep a lot of cash on the sidelines to be able to take advantage of any dip that we do see in our markets and for Tesla stock, because I do think great things are coming. The markets are just not pricing in. So that's my opinion. Let me know what you guys think down below in the comments section. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. If you guys would like to come trade with us live in real time, link down below in the description of this video. The rest of this year is going to be exciting. 2024 is going to be exciting. Heading into 2025 as well. So we'd love to see you guys over there, and we will welcome you with open arms. You guys have a great rest of your day and night, and I will see you in the next one.